Wow, we have a lot to talk about regarding Tesla. We're going to talk price targets, valuation, we'll talk earnings recession, what's going on in South Korea, and some updates on Musk. First, though, I want to announce that on December 9th, this is a really special opportunity. I am going to be able to invite some of you to the stock exchange, both inside and outside. So 4 p.m., closing bell, mark your calendar, December 9th. If you are a course member, there is a form in Discord that you can click on under course member announcements, and you can enroll to actually come inside of the building. If you're not a course member, we'll be doing a meetup outside, or if you don't get in, we'll be doing a meetup outside. So December 9th, New York Stock Exchange, and really excited, so stay tuned, or watch on TV. That's going to be really fun. So, Tesla. First of all, big Wall Street bear just came out and actually moved their sell position on Tesla to neutral, which, even though their price target's only $176, is a big deal. And one of the reasons we're seeing this sort of shift is, well, in their words, they're suggesting that the year-to-date pullback has balanced out their near-term risk-reward. Basically a fancy way of saying, hey, we think a lot of the excess fat of the valuation is gone, and now there's potentially a moment of upside to come. Now, one of the reasons people say, oh, look at Tesla's valuation now, it's not actually that bad anymore, is because when you look at the 2022 earnings estimates for EPS, you're actually at a valuation now of under 50, that is a PE ratio of under 50. And if their growth rate is 50, you're at a PEG ratio of under 1, which is really, really incredible. But if you look at 2023 estimates, which are basically the forward 13-month estimates now, your valuation actually goes to under 30 on a PE ratio multiple. That's actually pretty freaking incredible for Tesla. So some really neat upside there. Personally, I've still got my 550 price target for it. I'll talk about why I think Tesla's price has been so depressed in just the last month. For example, Tesla's down 20%, and there's a special catalyst for that, while the S&P has rallied at 6.5%. So a little bit of pain here. So we'll also talk about sort of my thoughts on earnings recession, but I want to hit this piece of news first, and that has to do with Tesla South Korea. Elon Musk is now considering South Korea as a top candidate for a new gigafactory, specifically for batteries. And not only for batteries, but also as a way to diversify from Shanghai. Think about the protests that are happening at Foxconn. That's causing Apple to have to delay some of its iPhone shipment capabilities. And the last thing we want is Shanghai to get locked down again. There's a lot of pressure on Tesla to use their excess cash to do a stock buyback. But what if Shanghai gets shut down for all of 2023? And Tesla would have some substantial problems ahead of it. Now, it's got plenty of cash, it's got cash flow. Even with Shanghai, it essentially had operating cash flow, although it was near break even without Shanghai when you look at the investments they were making in Berlin and Austin, Texas. But look, the last thing we want is another shutdown in Shanghai. Knock on wood on that. But see, what's actually kind of neat is an investment in South Korea could be pretty dang brilliant for the Inflation Reduction Act. What's unique about South Korea is that we have a trade agreement, a free trade agreement with South Korea that was entered into March 15th of 2012. That's the Ides of March. I'm a big fan of dates, by the way, and not actually like dates with women, because the only dates I go on are with my wife, whom I've been with forever, but also the Black Friday date, which is in 2 days. Make sure you take advantage of the 60% off coupon code. Any program that you join will get you in to the raffle. Just fill out that form once you join. Keep in mind you get lifetime access to all the lectures. We've got a bunch of new lectures dropping. On Friday, we got the Elite Hustlers course coming out. On Monday, we've got the $5 million trading challenge starting. We've got new lectures coming for stocks and psych, the real estate, the property management courses. No, y'all should know this by now. Nobody works harder than me, and my goal is to make sure these products are amazing. So I'm doing a nice end of the year revamp to really help add value, and next year I'll be adding more lectures as well. I just keep adding more content. That's my goal, provide more value. So South Korea is pretty unique, not only because we have a free trade agreement with them, but that actually then enables us to take full advantage of that $7,500 credit for batteries manufactured in South Korea, or a region or country that qualifies for Inflation Reduction Act and energy credit rules, which require that these batteries come from countries with which we have a free trade agreement, which China's not. Now, what's unique about Korea is they already export thousands of Kias and Hyundais. GM's got a plant in Korea. They also export other optical equipment, fuel, machinery to the United States. Think Samsung. They're our sixth largest trading partner. South Korea is also really interested in growing the battery charging network within South Korea so they can push more of a sustainable energy platform and plan. And Tesla could really be a win-win relationship for South Korea. See, my biggest belief is that what you need is Tesla to get their act together at Giga Austin, that's Giga Texas, right? Get their act together at Giga Berlin, maximize the potential production there. Once they figure out the model and perfect it, copy and paste it. Indonesia, India, South Korea, more in South America. Now, of course, the Inflation Reduction Act has kind of moved that needle from maybe countries like China, where we have trade tariffs and not necessarily free trade. That's, again, what a tariff is, after all, and move that over to free trade countries. And I believe that once the model is ready to be copy and pasted, Elon Musk just needs to paste. And that is going to be a gorgeous opportunity to deploy that cash war chest that Tesla has, which is a really, really big deal for increasing production. Now, of course, FUD over demand will never go away. For example, Tesla just reduced prices in China. They also came out with a new treasure chest referral style system to where when you refer people to get a Tesla or buy a Tesla, they could win a belt buckle, a Model S stroller, custom home chargers, things like that. There are reports now that in the first 3 weeks of November, we only saw 50,000 orders, and expectations were higher than that, and so some people are a little fussy about that. Tesla China has responded and said, no, this is fake news. We don't have a demand problem. Elon Musk has regularly said that. Obviously, if you believe that there's going to be a demand problem with Teslas, you probably just don't want to invest in Teslas. You're probably also one of those people who looks at all the recall articles and actually thinks that thousands of Teslas get recalled all the time, when the reality is there have been 19 recalls this year, and they get fixed via a seamless over-the-air update that installs at night while you're sleeping. It's pretty ridiculous. I actually tweeted that, and it got like 4,000 or 5,000 likes. Follow me on Twitter, by the way, if you haven't yet, at RealMeatKevin. But look, I will tell you, I mentioned this earlier, that I would tell you this. Why is Tesla suffering so much? Look, Tesla's suffering for one simple reason. In my opinion, Twitter. That's it. Elon's really got to relax with his attitude on Twitter, and he's got a strong attitude on Twitter. Okay, let me give you an example of what I mean. And remember, Tesla declined 20% last month, while the S&P 500 went up 6.5% right after the Twitter acquisition. And the anticipation of that has led Tesla to suffer. I'm going to talk about earnings recession as well in a moment, but I'll tell you, people are so deeply questioning Elon Musk's management style at Twitter that Tesla has really just now become a hedge for Twitter. And it's a free hedge for Twitter investors. That is, if Elon Musk screws up at Twitter and needs more money, breaks the piggy bank of Tesla, robs Tesla shares by dumping them on the market and taking that money basically, and throws that money into Twitter to save it. He has said himself he sells Tesla stock to save Twitter. Those are his own words. Now, can you fault him for that? No. I mean, he's got a new business venture. Is that what's leading to a lot of pain for Tesla stock? Of course, because there's so much drama about what Elon Musk is doing over at Twitter. But I will say he probably needs to relax with his attitude. Like, here's just an example. Business Insider posts this article here. Sam Bankman-Fried reportedly owns a $100 million stake in Elon Musk's Twitter. And then he goes, false. Also, Business Insider is not a real publication. Just give up. I mean, like, okay, it's one thing to say false, but like the aggressive opinion, not really necessary in my opinion, especially when you jump over here and you look and you say, you look at the actual article, spokespeople for Twitter and FTX did not respond to a request for comment. So it's like, they reached out to you to ask you if this was true. They're just reporting on the rumor, and they give you all the details in the article. I know the headlines says reportedly owns a $100 million stake, and maybe that's what people are upset about. But like, I think if Elon Musk just toned back the aggressiveness a little bit, he'd be a little bit more CEO-like. And then he could actually align better with institutional investors. See, institutional investors, I think, are sitting on the sidelines. I mean, you've had Dan Ives, who's been a big Tesla bull, move to the sidelines on Tesla. He actually no longer calls it his sort of like deal of the month or stock of the month. He's removed that. A lot of this because it's hard to advocate buying Tesla when there's so much drama going on with Twitter. Elon's adding fuel to the fire with his left versus right thing. And I know some of it is justified, but as a CEO, you have to remember that if you piss some people off, those people go to their institutions and their hedge fund managers and they're like, I will take all my money out of your company if you support this Elon Musk guy. They could be, like super devout Democrats or super devout Republicans. Who knows? It just takes one thing to piss them off. So I don't know. Like, I think Elon would just be best served. Shut the F up on Twitter, man. That's it. In the meantime, go do what you got to do at Twitter. I have faith in Elon. I think this is a buying opportunity for Tesla because it's really Twitter FUD that's dragging down Tesla. I also think that, and I've said it before, I think Tesla will do very, very well in the recession. That I know the stock performance the last year to date here hasn't been great because it's down 57%. So that might seem ridiculous. But what I've always said is that I believed Tesla's EPS would outperform other companies. And I think over the next 3 to 4 quarters, as long as Shanghai doesn't shut down, you're going to see exactly that come to fruition. I know fundamental analysis sometimes takes patience, but there's nothing fundamentally bad about Tesla right now. If anything, the fundamentals, in my opinion, are just improving. The only risk could be that demand falls off a cliff. In my opinion, if demand falls off a cliff, Tesla valuation will continue to fall. It will be very, very bad. So I would not invest in Tesla if you think they're not going to be able to fulfill all of their deliveries because there's not enough demand. I would not invest in Tesla then. If you think there is more demand than production capabilities for the next few years, Tesla's probably a really good bet. And even though I'm a licensed financial advisor and I've got educational courses on building your wealth, this is just my opinion. I want to be very clear. This is not personalized financial advice for you. But what is a suggestion is that you check out that 60% off coupon code. Make sure you sign up for that bell ringing event on December 9th. Again, you could you're invited to meet outside. We'll probably do a little meetup around 4:30 outside, or fill out the form for the raffle to come inside the actual stock exchange. And if you sign up for the courses, you got plenty of time to be part of that raffle. Thanks so much for watching. We'll see you in the next one. Goodbye.